repeat because I already saw it, is what do you do in these days when you have a big sell-off and then the sharp recovery?
What do I do? As
Yeah.
a swing trader or intraday trader?
Yes. Both. How does this
Um,
change your view when you have days like today?
Not at all. We had the pullback, and this is exactly what I was looking for in the video and just in comments, looking for the market to pull back to that 20-day moving average, hit down the bottom of the profile, and then reverse. To me, it's just following the models, hit that 20 moving average, and then off to the races we go. Russell was pretty good today to us as well.
Yeah.
So not surprising to me in the least. Volatility, a little higher than I would have thought, but not the directional movement.
Yeah, and so volatility to the downside, volatility to the upside, but even with all these economic things I talked about today, J9 and others, it's crazy how well they'll still play off price. We can talk
Yeah,
economics and
yeah.
what's going on in the background, but the market will still find those price targets, the equilibriums, the things that Corey talks about, the EM, then the 20-day moving averages. So watch for those because those are your kind of your benchmarks, with or without the surprises. And then when the surprises happen, they usually go the opposite direction to that same kind of view. At least that's what I've seen. You can share whenever you're ready, Corey.
Well, that was picking up on that. Tony, myself, and Blake are very geared on the price levels on intraday. We're not, fiddle faddling with the economy, not on the intraday account. Swing account, yes. Retirement account,
Yeah.
yes. We're worried about those. But on the intraday account, and I'll be showing this just in a few minutes of the trades, there was a 20 handle play called out, taken, and traded in the futures room, 6401 short, 20 handle profit. And in the Russell, what was the exact number on the ruddy there? The Russell was 2265, long trade called out. Why? And it produced about a +5 and wound up producing, I think, a +8. Why? Those were the expected moves. And they produced a quick little burst of action that gave us a risk, gave us a spot to put a trade on, a stop in case it goes the other way, which is real. But it worked as it should have. So that's just Blake, myself, and Tony are very price centric on
Yep.
the intraday chart.
Intraday is price centric, but I still love the fact that even on days when you have econ, price still wins.
Yeah, yeah,
It hits those
absolutely does.
targets and bounces. So even if you
Where the
say, "Oh,
price
but we have
bounce.
we have news coming up," yep, and the price still wins.
Yeah, your levels and Tony's levels and your profile, my profile, your monkey bars, and just expected moves and the whole kit and caboodle here. Just looking for spaces to put trades on and manage risk. It's not about prediction; it's about risk and getting a trade on and holding on as you do. And I'm the scalper, me and Tony, but you hold on very well to capture bigger handles and bigger moves out of what the market gives us.
Yeah, so all very complimentary. Well, I'm not going to take up more of your time. I taken a little bit there, but I'll
I'm
leave
good.
it to you.
I love our overlap. It works. It's a good strategy kind of idea back and forth. I like it.
Yeah, yeah, and like I said, they're holding their breath, but are they? they're they're going.
They're
They're
blue in the
hyperventilating. They're
face.
not holding their breath. They're hyperventilating, I think.
Yeah, they're blue in the face at this point. What does that keep
Yeah,
holding? Hold your breath. See how long it gets you.
yeah. They're hyperventilating earlier. Now they're holding their breath. So, all right, I'll leave it to it.
All right. We have a minute to transition over. Thank you, Blake. Yeah, we're going to pivot a little bit on my sessions. I like to do a little bit on the intraday logic, what worked, what didn't work, what was exciting, what was boring. We had some rain sessions on Friday and Monday. We got a little spicy on Tuesday, and we got some spice coming today. But I want to know. Okay, gotcha. All good. One second. I want to know how y'all are doing in the session. So how are y'all doing the big picture? We'll focus a little bit on the big picture. So big picture talk. We'll do swing trades. And as I wait for those, how are y'all doing in today's session? Hey, Raj. Dr. Bob. Dr. Bob, good to see you. Hey, Jay. Jay, stay done. Hey, Daniel. Oh, I love that. Daniel said, I'm back from one of the best vacations ever. Where did you go? I want a best vacation ever. Italy, or where was it? Greece? Where was the best? Hey, Darren got they done good. Robbie, they done. I like today's session because it had a little bit of something for everybody. Okay, gotcha. Okay, good, good. Back in the chat. One second. Dun, dun, dun. Little messages here. Okay, so everybody's good. Oh yeah, I'm on. Hey, Brody's good to see you. Hey, John. Yeah, doing okay, should train better. Just to pinpoint one thing, my session, I'll do a little bit on the intraday logic, kind of picking where Blake and Tony were left off. I tend to go after Tony or Blake in the afternoon sessions, and we're intraday traders, we're little scalpers, but we have our hands in different little plays and trades here and there. So in last night's video, here's what I was looking for, just in a quick note about how the game plan worked and how the update was and how we were looking for the market. So in last night's video, let me start with the top and go to the bottom here. Top is just the daily chart. So in the S&P, we are expecting a pullback. This is my session yesterday, kind of just how the trades work, how the plays go, and what are you doing with your swing account if you're a short-term trader. The answer is taking profits into the downside and expecting another rally. But the market did pull back. Again, when a market is overextended, when it's above the moving average, when it's trending up, it doesn't go straight up. It may feel like it goes straight up, but it doesn't. And so when a market goes up 5, 6, 7 days in a row, when it's above the profile, it's not going to be a timing factor. It's going to be a directional factor. So we are looking for the market to go down, playing puts, playing the downside of the market. And the targets can be this moving average 6400 and the like. It's just kind of repeating last night's video. By the way, bonds are strong as well. And crude is up to the midpoint once again. So just other things beyond the equity market, we're seeing crude, I think for the third time in not so many days, play. Yes, we are. Up from the 6150, boom. Up from 6150, boom. Up from 6150, boom. That's just a different little way to think about it. But the stock market did and does have the logic of pulling back to the 20 moving average. And that's about 6,400. Greeny, I think an hour talking about that. So in the video, that's the bigger picture from this 6500 to that moving average and maybe even a little bit under it. Now in the profile last night, we had the game here. We'll show the profile and the game plan. And I was anticipating a little bit more bearish action. And some of y'all can joke with me, and you should, because I'm the bull on TheoTRADE, and I guess me and Johnny. But when I get bearish, please pay attention. It's usually a very short-term thing, and it usually tend to occur. If I'm bearish, it's because the data have essentially hit me in the head and made me be a little short-term bear. But these situations are what we're going to try to replicate, trade, and then take advantage of. So with the market probably pulling back a little bit lower, we did have these targets of the expected move, the lower profile, and we're expecting it to go a little bit further down. We actually, so Blake and I were discussing the reversal in today's session. That's approximately the weekly expected move. That's 6380-ish. That's your profile, and that's your expected move. So the market did what it should have done, but then the dang thing just launched up like a rocket ship there. But anyway, in the futures room, we had a short trade right here. This is the lesson in today's session. The power of the expected move. I'll sort of put this in the review. We won't go over it necessarily, but we got it. We're playing for the expected move. Again, looking for the market to go. 8:39 in the morning. We're looking for the short side, looking to play short against the 6401 negative divergences. Just repeating the expected move, 6401. We're at the underside of it. Traders are going short there. We're going to play, what is that, 10 minutes later, about 10 minutes later, it gave a full plus 10, 6401 to about 6390. And then just not too long after that, the thing kept cooking to the downside. And what was significant about 6401? It was the underside of the expected move. So that was a patient little setup trade. On the other side, we had a buy against the Russell's expected move. My profits were on the Russell, off the long side of the Russell, in a day where the major indices were down and are down. You know, contrarian things work just well. But I'm fading the move. The Russell wasn't as weak, and now we're at the top side of the expected move. That's again 2265, 2265. And the play was a little bit stronger, and it gave, I think, a +8 when it was all said and done. Now, just you can look at the timestamps, how long it takes. It takes about 10 to 15 minutes to get these trades working. We're scalping them. We're not playing for super bold holds. So that trade setup in the Russell looked like that live real time, and the market gave a pretty good play. So that's all I'll do there, talking about the big picture. But again, just the game plan's really important, where the market's headed. And I'm with Blake here. It's not why something's happening, and Tony and the rest. We're not sitting here. I joke, but I joke lovingly. But can you picture Tony and myself just biting our nails? Oh gosh, what's the Fed gonna do? Oh no! No, we're trading price levels. We're entering, we're managing, we're taking a stop, we're taking profits. And on the intraday chart and the big picture too, that's mainly what's guiding our decisions. And then Daniel's, where'd you go to, Daniel? Hey, John Flake, good to see you. Rhode Island, there you go. Oh, nice. Daniel said I went to Rhode Island, Connecticut, and the U.S. Open. Sometimes I go up to New Jersey, and I love that, Atlantic City, and so we went to New York and some little places up there this earlier this summer. Beautiful. Never been to Rhode Island though, so I wish I could vacation there with you. So, any questions now? We're going to pause. We'll go to the big picture. We'll do the scans, the plays, and the logic. So, any questions? And how that efficiently and also unexpected moves. So I'm going to pause right there and make sure everybody's good. And we'll switch over to the swing account. So questions on the intraday logic. It's going to be in today's lesson, the game plan. And just when you're under the profile, remember, I'm not going to be able to do reports 10 times a day. I do a report once a day, and the report comes at the end of the session. So when you're under the profile, you tend to go back up. Okay, questions, comments, thoughts, and I'll jump in the big picture. But I'll make sure all the intraday, all the short-term traders are taken care of before we do that. Aha. Dr. Ruff said, how many days in profile? So to me, I'm looking at a 10-day window. So 10-day window makes the decisions for me because I'm looking for, this is a good discussion to have. When I'm doing the profile and the game plan, I'm looking for the very next swing. So I kind of joke, I'm a swing trader. I am a swing trader, but what does that mean? I'm looking for the next swing of the market. So what do I mean by swing? Game plan videos here in Corey's Corner. So if we're under or above, let's go back a couple sessions here. Let's go back to, I believe, Friday. Friday? Yes. So I'm only concerned with where the market's likely to go in the next 1, 2, or 3 sessions. So again, it's that if you're here, you're going to here type logic, and we have that downside target. I tend to play for the middle. I tend to exit positions at the middle. And when the market goes back under, we flip and go the other way. So when I'm talking about being a swing trader, it's really on the nose. Where is the next swing of the market going to be? And if you're at the top, you're likely to swing, or in the South, they call it swang. We're swang trading. And when you're under, you tend to swing back to the upside. So what we're doing is doing a game plan, a puzzle, putting a puzzle together, putting the market structure together. And Tony, I think, says it best. If you're here, you're going to here. Well, it's not going to do it in one fell swoop. It's going to take a sweet little time, and it's going to do so within 2, 3, 4 sessions. So because I'm looking to get a trade, puts, and targets in the profile in a 1 to 3 day window, I'm going to come behind that and use that as a departure point to trade the intraday chart or to play puts or do different little things. And once we flip the other way, we go back to the bull case, and we're doing that in today's session. So once we're here, if you're here, going to here. So that just sets up a trade. But it is a 10-day window, 10-day profile with the goal of trying to figure out where the market's heading with better, not foreknowledge in any sense of the word, but better statistics, better probabilities, and just a better sense about where the market's going than not. And when it winds up happening, we do the whole woo doggies, and woo doggies is another Southern term for wow, that actually worked. Whoa, that's pretty cool. So to me, the profile is going to give you the best insights about how to trade when it's above coming down. And it may take 2, 3 days to do it. Or the flip side, which is, let's go back maybe to the 6th or so, just kind of showing you how we play profiles and how we get this going and how we build trades. If you're a swing trader, you're just playing calls and put spreads and call spreads. If you're an intraday trader, what I say is you use that as a departure point. Well, what is a departure point? It's the same thing we'd say about going on a trip, on a vacation, on travel. If you're going to Connecticut and you're in Florida, you got to go north. So when the market's under the profile, maybe even take it one step behind, maybe not Monday. Let's go back to Friday. So that's, I think, a similar setup is taking place right now, not quite as dramatic. And the similar setup is right now. We have the pullback. We expected the market to come down. It did. It went down quite violently. But now the market's trying to find a support shelf, trying to rally back to the high. And I think that's where we are right now. The bond market similarly has taken a reversal. So from the profile earlier in August, the bond market was short and bearish and has since came down to these lower levels. So it's just a little game plan for the future. The Russell was under, has since made a new high. Okay, the Russell went up and made new highs. That's the game plan. The Nasdaq has since made new highs, and so has the S&P. So to me, it's a 1 to 3 day window, and what we're looking to do is do calls and call spreads and any type of long shares or long micros for the market to return back to the middle. And when it goes to the top, we're going to flip it and go the other way and then go to the short side. So 10-day look back in the volume profile for a 1 to 3 day window of where the market's going. And then, as I say, come behind that, stand on top of that, use that as a departure point to begin trading your intraday account long over here and then short over here. And then we flip it and go the other way and go long. Yes, on the Disney trade. Morning, Sarah. So same type of logic on these stocks. So as we go to the swing logic in the bigger picture, so things that are sideways uses the same logic as the volume profile. So a stock like Disney, we want to make sure our perspective is okay, and it is. We've had good trades on Disney, both long and the short, because Disney, it's not so much in the volume profile, but it is in the context of mean reversion. So what I'm doing is not pinpointing and saying, I'm bearish Disney because I don't like it, or I'm bearish the S&P because I don't like it, or I'm bullish the S&P because I do like it. We're not doing that. Again, back to what Blake was discussing. Futures or short-term traders are not doing this. Oh, goodness gracious, what's the, what's the tweet going to be? I mean, we do worry about tweets, but not to the extent that we're paralyzed and ostrich and head in the sand stuff. We make decisions off of price levels, and sometimes the news works in our favor and sometimes it does not, but that's what risk is. That's what stops are. And puts and calls have built-in risk control. So they're very, very good for short-term traders. So why a short in Disney? Same reason we went long Disney, because the shares were overvalued and the shares were above fair value. Well, where's fair value? It's about 103. Where's that come from? It comes from price, back to Blake logic, price telling us that 103 is a fair value for Disney shares. So why would we need to know that? Well, if 103, roughly speaking, is fair value, that's what a share of Disney is worth, so says the market. So there becomes an opportunity to play a put or to play short or play bearish when Disney shares are above that, say 120. When the share price is 120, fair value is back to 130. That's a really good spot to go short, or 103, I should say. It's about $20 of potential profit if Disney shares return back to fair value, which they did. And the other trade we had here was long off of 85. Call spreads are just shares. You can trade shares just as well, 100 or 50 or so shares. And we're going to take the trade off at the midpoint because that's return to fair value. So that would be considered on discount. So $85 is on discount or on sale from something that regularly cost 103. Therefore, that is a good trade to see if the market can return to fair value. The same thing happened here, the same thing happened here, and hopefully the same thing will happen here. It has nothing to do with anything other than how we use profiles and game planning. So now, how long will Disney shares? It's going to take longer than 3 days. My goodness gracious, right? But it's not different in terms of what we're expecting, trading, the risk, the opportunity, the reward. And if things go wrong in a breakout, it's going to be a losing trade. If it goes right, it's going to be another winning trade. So that's the thought thesis, if you will, on mean reversion, why we go short from above, long from beneath, puts from above, calls from beneath for the market to return to fair value. And when you're trading something in a range, this helps too. Take everything off the chart. Everything. Get out of here. Everything off the chart. And try to think of it in terms of this. This is from the range class, just range fading in general. Try to think of the market if you can. If I can get it done. Something along these lines. This is going to be your overhead resistance. Nope. Right there. This is your overhead resistance zone, if you will. So let that be your zone. If get a little transparency going, opacity. So think of that as your zone. So when the market's up in this area, it becomes a good opportunity to be short. And the flip side is going to be true. And we do think of them as zones. We don't think of them as magic numbers or magic, things like that. We're not magicians here. We're supply demand traders. So what that means to me is that this is expensive. This is true for volume profiles and the like. So that becomes an opportunity to get short. This is expensive. And on the flip side, like I say, this becomes, I don't want to say the word cheap. I don't like that word. It's cheap. It becomes, well, where's my little play here? Not expensive. Do I have it here? Where's my little? Oh, does not become expensive. There's my text. It becomes affordable. Discount. Discount. Again, the word cheap probably is not the best word, but anyway, that's the thought process there. That's a big picture, and that could take a couple of weeks or maybe even a month to get the market to go from expensive to fair value. And of course, the midpoint's fair value. So that type of logic is going to carry over in stocks like CV. I've done trades in CVX. Right, we're actually looking for it to come up to the highs, but CVX had similar type of logic, similar type of trade setups. We're going to move because of the price differentials, but here's your resistance, looking for the market to get here to short it. We've had successful longs and shorts. We'll pull that back down because we had a little change on the earnings, essentially a little dividend type thing. But the same thing's going to be true in XLE, which is your energy sector in general. So see the market, what's happened here is if you ever get in this little path here, especially for ETFs and stocks with dividends or earnings or things that change just a little bit, where are these little bars coming from? They're coming from a market or a stock that has done dividends or has given disbursements or, like dividends is probably the right word. So take it away. Take it away. No dividends. And that way you get a cleaner chart the way we were trading it back in the day. Right? Back in the days, long here and then out here and then short here, long here, all those little things. So kind of a quick little note there. Sometimes when you're playing something longer, the dividend type thing can affect the chart. That's a whole other story. Yeah, discount. Sorry, I said discount. I don't want to say the word cheap. This stock is cheap. It makes it sound a little bit derogatory. uh, hey, Tim, good to see you. Yeah, there you go. Discount, discount. Reasonable. Yeah, I think Dr. Bob said reasonable. That's probably a better word. Reasonable. On sale, Darren, on sale. So Carter said, Theo Carter said, how can I find the fair value on Tesla? Tesla is a stock that is range bound. So I know that just by looking at, well, just from experience, but Tesla is going to be a stock that is currently in the context of a trading range, meaning it's neither bullish nor bearish. So Tesla's a little jumpy stock. There's little things that affect it that go beyond fundamental analysis and technical analysis. So I'd be very careful when it comes to Tesla. What I mean by that is you can have the best setup in the world, and there'll be a tweet one way or the other, and the stock's going to do something very, very abnormal. So doesn't mean it's bad. It's just risk is not going to be the same. The same type of long here, short here, long here, short here fade. The thing is going to be not quite as applicable. And that'll be true for any stock that has what we call headline risk. And Tesla certainly has headline risk in spades. But the good news is if you trade Tesla correctly, right, Garrett and the team, you can get a lot of money with a stock that has headline risk if you're positioned the correct way and things like that. But I'm a cool, calm, collective cucumber, so I'm not sitting here, hey, I just popped 400% in Tesla. I'd rather not balance the risk of losing because a tweet came out one way or the other. So where is fair value in Tesla shares? Given this type of logic, fair value is probably around 275. And I say probably because once again, this has a tendency to get really, really on discount. Discount was around 125. Just keep it simple. It doesn't, when something goes on sale, it doesn't go on sale for long. So a fair valuation, and we're looking at a range maybe like that, you'd be looking to go long here. But again, that's why the Dawn type of calls and call spreads and option trades where you put a position on and let it go for a month or 2 months. You're not doing the what I'm doing with futures, which is scalping. So it went here, long here, oops, got stopped out, right? You're playing a call, and your risk is not your stop loss. Your risk is that the market breaks and goes the other way and never comes back. Well, it did come back. It went back to fair value. So the next trade setup in Tesla was down around 150, which is a little bit better discount. And 150 took it up to about 275. And then no trade, no trade, no trade. Same logic here. If you're going to short it, again, Tesla's not a stock you want to speak from experience. You don't want to short it. Anybody 420 took it private. Remember that? Anyway, got fined from the SEC from doing that. But hey, look, it cost put players money. So there you go. So the market is above. It had lots and lots of overextension, but still, if fair value is 275 or 260, somewhere in that realm, it's the same thing. This thing is really expensive at 450 and about 500 per share. So you might, take a couple of hits and your put may actually go to zero, but you're not going to close the put. You're going to keep the put on because it could, as Don would say, come back to life, which is probably what happened in Tesla. So fair value for Tesla shares is around 275 on the daily chart, at least. Michael. Ash five. Yeah, a little bit of Corey mid session. I only have a few more minutes, but what other things you want to look at? Because what I want to focus on is the simple trades, the big picture. So the big picture for me is going to be again, how do I let me take you back? I think we're in a very similar situation to I keep saying this, but it helps to understand where we probably are and where we're probably headed. So not long ago, yesterday, day before, and actually the last couple of days, we were looking for the market to come down. All of my videos, all the comments was the market's above, extended, targets down. Obviously, the alternate thesis could have happened. It could have been a breakout, but that's your risk. The reward is that the market comes down, which it has done. So now we're going to flip the script and go back to where we were on August 4th or even August 1st. And this probably will happen very quickly. So let's quantify where the market was and what happened. The market had pulled back from a lofty high. Now, it kind of went a little bit higher than maybe expected, but it did eventually pull back. It went from 6400 to 6300 and a little bit under that. From that pullback, the game became let's see if the market can rally back and make a new high. So this is the things I talk about in the afternoon session. Almost every single session in the afternoon, I advocated this position. Bullish off this 6400 or 6250 if you had it, because the market is still uptrending. The economy is still relatively strong. The Fed rate cut is on the docket, and the market probably goes off to make a new high. So that is the game plan on a daily chart. If we look at that from the volume, which by the way, it did go to make a new high. On the volume profile, again, we were under. We actually put, steep little undersold there, discount, right? Market's on discount, buy the market. And the next few sessions were bullish. The game plan was bullish. The expectation was bullish. My video comments were bullish, and the trades were bullish as well. So the market ultimately went to the high and went well above the high to continue not just the volume profile, but the pullback to go off and make a new high, which it did. I'm not necessarily in the prediction business. I'm in the probability business, as we all are, because I do not know if the market will go back and make a new high. But the model would suggest that. So it is not special. It is not magician. It is not voodoo. It is probability, statistics, and modeling. So as the video will probably do tonight, this is a buying opportunity. This is a pullback to be bought. This is reasonably, again, as the market pulled back here. But you've got to fight against this bearish stuff that everybody's telling you the market's going to crash, fall apart, it's all over, and the economy is going to crash and burn. And you really got to fight against that stuff. You really got to fight against that stuff. It is so detrimental to a long-term trader. Short-term trader, not so much. Long-term trader, constantly looking around every corner for a bear, it does not pay and play well. And that's one of those things I had to learn the hard way because I'm certainly, I got my career launched in about 2007 and 8, did very, very well on the short side and had a lot of trouble getting back to the bull side in 2009, 10, 11, 12. And 2012 was kind of the light bulb moment. It's like, stop this bear crap. And it was crap and it's still crap because the market has a tendency to go higher. Don't lose that perspective. But even the market's overextended here, but on a short-term basis, it's just one more of a simple, basic, again, perspective is everything, pull back to a moving average and a rally back to the high, a pull back to the moving average and a rally back to the high, a pull back to the moving average and a rally back to the high. And then the commentary here, we have a pull back to the moving average and a rally back to the high. I'm out of breath saying that, right? Pull back to the moving average, rally back to the high. Is any of these guaranteed? No, they are not. They're models, they're statistics, and they're probabilities. So do not assume the market's going to do this. Do not mortgage your house and throw it all on, red or something, red 18 or whatever. But that is what the model would suggest. And that is what the market is doing and has done and will probably do again. So all the bearishness, where is this coming from? It's a perspective. And not everybody in the market is going to see the market as topping. There are people who will say, my goodness, what a great chance to buy. I'm waiting for a pullback. Let's flood our account back in the bull side. And that's ultimately why the market did. I say that, but is a really, really good reason about why the market's coming up from under the profile, up from a pullback, and why we got the pullback to begin with. Again, you do not want to be buying a market that is overextended at the highs. That's not a good strategy, even if the market is to make new highs. Not a good technique to be throwing yourself long after a multi-day rally and above the profile and things like that. You need to be throwing yourself long or just calmly, don't throw yourself anything, calmly trade your account long on pullbacks. So I'll be monitoring that on the expectation the market goes. Bias is a killer, both directions, bull bias, bear bias. You're just missing the big picture. Bears are going to hang their hat on the technology sell-off, and correctly so, and rightly so. The technology sector's taken a big hit recently, the Nasdaq particularly, and of course leading tech stocks, specifically AI stocks, and Palantir have been yanked back from lofty heights. I think it was Brandon saying that's actually a good thing. Yes, it's actually quite a good thing. We do not want these stocks to just be up, 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 even if you're bullish. You need the market to give you little spots to get long. So probably in tomorrow's session, I'll be looking at pullback logic and those types of things. But just keep in mind, there are other things happening. This is one of my things as a trader. Things that get headlines are popular and there's opportunity and trades in them, but there's a lot of other things happening. And I like as a trader to kind of, as best I can, focus on math, focus on, probabilities and the nerd stuff. And I try to stay away as best I can because I'm human from sensationalism, both directions. Market's going to go straight up. That's sensational. Not going to happen. Market's going to crash and fall apart. That's sensational. It's not going to happen. So one, if that's what you're thinking or feeling, this is the top of the market. We're going to here. No, not unless something terrible happens. But by the same stern warning, market's going to go to here. No, it will not in the short term. The market's going to gently wiggle and squiggle, and as I say, higgle and piggle itself, and just basically follow the models. So I don't like extremism on either direction. Bull, light my hair on fire. Bull. No, I don't like that. Light my hair on fire. Bear. No, I don't like that either. So just that's why I'm so intent on the profile is that it gets you outside of this. Oh gosh, oh my goodness. And it just gets you into mathematics. Expected moves is the same way too. And just trying to be cool, calm, collective, and just doing the best we can with the information that we have. No one knows the future. No one knows what the Fed's going to do. And in fact, let's talk about that just quickly. So then, hey, Tim. Yeah. I'm with you. I'm with you. So question, indeed, Tim. So question so far? Did I miss anything? I want to show you the headlines, but it's just sort of making sense that if anybody's sitting here trying to be bearing you up and scaring you up, um, uh, I don't know. I'm gonna keep what my mama told me as a Southern boy. If you don't got nothing nice to say, don't say anything at all. Questions, comments, thoughts? Yeah, I mean, ultimately, to keep it going, that yeah. So what is sort of going on? One thing I want to keep in mind as we go forward. Now, the technical analysis is just that, it's price. Price is not the arbiter. It's all about supply and demand. Every trade is a supply and demand. It's not a prediction. So Home Depot was kind of meh. Target was definitely not meh. So that gave the bear some ammunition. In fact, the Target stuff was so bad. Their CEO resigns. I mean, you don't see that happen often. I forget his name, but I said the 11-year-old, the 11-year tenured CEO of Target, because their sales were so abysmal, and they have been abysmal. He stepped down. He chose to step down, which I think is a very valiant type of thing there. So again, things that are weak get weaker. Target is on the downside. Target's on the sell side. Target, if you look at the analyst tab, it's surprising to me, but their sales per share, their cash flow. See, their sales per share, if you look at it closely, this is kind of Professor Bierman's world, but 234, 232, and 230. And we saw the most recent is a little bit lower than that. So Target's been behind the eight ball for a little while now. It's been on my list of weak stocks getting weaker, and it was one of the weaker performers in 2025. So again, I would probably be a little more on the short side of Target than not. But we're going to have Walmart, and Walmart's on the bull side. So anybody going short Walmart has had a very difficult go at it because Walmart, for better reasons or lack of a better term, has been very, very bullish. The fundamentals are, I think, a little bit better. And I shouldn't say that. There's no opinion here. The fundamentals are a little bit better. The analysts are more bullish, and the sales per share, earnings per share has been going up. 158, 162, a little bit down there, 142, but then 2023 was at $1.91 and then 241, and we're going to have the upcoming quarter. Or dividends per share has been consistently increasing, and sales per share, once again, a very, very important metric. Targets has been going down, Walmart's has been going up. So that's led the stock to be more bullish. And again, bullfly trades and continuation trades in Walmart because it has a stronger fundamental, better earnings per share, maybe better management reasons, but these stocks ought to be pretty similar. They're big box retailers, but there is a little bit of a difference culturally and opinion wise on these, and price wise, I think too. Target's a little bit more. I'll leave it at that. Boycott her. Exactly. That's kind of again corporate type stuff and political type stuff does play into these retail stocks. Dollar Tree, sorry. Dollar Tree would be, that's more bullish. So Dollar Tree's been on the long side. In fact, I'd be a bull in Dollar Tree. I'd be a little bull to get the market to go long off of this support shelf to get it back to the high, which is probably similar to GE. GE's got a similar type of bull position. Again, bull flight, I don't know the future, but the setup is going to be bullish. The trending stock is bullish. We're probably going to see that continue. Dollar Tree would be as well. It's actually quite a few. AutoZone. AutoZone is on the bull case. It's a retail. It's a car, type of O'Reilly, which is similar too. So you're seeing similar types of things, and these are retail names. If you're a bear, I'm not being cruel, but don't get too narrowed up on how awful Target is, and it is, when you've got lots more evidence of general bullishness or things like that, perhaps in discount retail or some other things in the retail. Target is a big component, but it is not the retail sector. Neither is Home Depot, Lowe's, and Costco and the like. Retail sector is very, very broad. In fact, retail's XLY, which is only retail's a component of the XLY. Yeah, yeah. Well, yeah, basically, Laurel said it very well could be. I mean, it very well could be. Laurel said that Target could be the next Kmart. Possibly, Kmart's the dollar. What's it called? That went out of business, and those times. I don't know. The Target's going out of business, but Disney had some trouble. See, the musician. Um, we see Disney as a trading range, but there was a point that I was very, very short. I think Don and a lot of other traders were very, very short Disney for a variety of reasons. The stock market ultimately peaked here and went into a bear market. Disney peaked essentially a year before that. So that was already a weak stock going into a recession. That was the battle of the Bobs. If you remember, Bob Chapek was the new person that replaced Bob Iger. He didn't get received very well and made a lot of changes that made a lot of people upset. So I was on the short, yelling out the short side, bear, 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 bear. But it was so bad, again, talking to Target, it was so bad, so bearish. Disney had, gone into the political and some other stuff happened. Mommy bloggers turned against it. The prices just didn't feel friendly enough. Anyway, they fired that dude. They fired Chapek and brought in Iger. So probably something may happen like that in Target. I'm going to jump off because Garrett and Don and Gianni are going to come on right now. So I'm going to clear the way for Don and Gianni. But thank y'all for being with us. Be careful, be safe, and we'll see y'all a little bit later. Team, stick around for Don and Gianni.